You must have heard about 5% wealth tax. Do you know what that means? Of course, that is only for billionaires, but taxes here in California is insane. It's around, like, if you make $100,000, 35% of $100,000 is around 35,000 goes into tax. So it's a very tax heavy state. But on top of that, now they are proposing 5% billionaire tax. Of course, that is in ballot at this time, and if the people vote in favor of that, then California billionaires, they'll end up paying 5% billionaire tax. That is too crazy, because just imagine, you own a stock, you have invested in a company, and at this time stock market is doing very well, right? Stock market is doing very, very well, and it's not gonna do well all the time. But according to that proposed bill, or those agenda, 5% billionaire tax agenda, if a person has $1 billion worth of assets or equity worth of wealth on December 2026, I think December 31st 2026, then that person is subject to 5% billionaire tax, right? On December 31st, stock market shoot up by 100%, let's say, or like not 100%, is a little bit of exaggeration, but let's say 20%, right? On December month, let's say altogether on December month, the stock market goes up by 30-40%, something like that. On November, that person had a wealth of around $700 million, and on December 2026, that person has a wealth of, will have a wealth of $1 billion, and that person has to pay $50 million to the government. And let's say in January, stock market comes down by 40%, 50%, something like that, right? Like, it can happen anything, right? Like, anything can happen in the stock market. You don't know what's gonna happen this month, that month, because it is always up and down. So what's gonna happen? That person is gonna hold around $500 million. If it comes down by 50%, then that person is gonna have $5 million worth of shares, right, in a company. So that doesn't matter. What's gonna happen after 1 month. According to that proposed billionaire tax, if the person's wealth is $1 million at the time on the December month, on 31st of December 2026, if that person has that much of wealth, then that person has to pay $50 million. And you may think that, oh, it's nothing, who cares? Do we care? Even if that person's wealth comes down by 50%, that person is gonna still have $500 million, right? That person can pay $50 million. Who cares, right? I'm gonna vote yes on that. But that sounds insane, right? Because stock market is, just imagine you are in that situation, and instead of saying billionaire tax, they propose 5% tax on everybody, right? Except low income, middle income. If anybody who makes more than $50,000, that person has to pay 5% tax. What is gonna happen? Are you gonna say yes? They are gonna come and calculate how much of wealth you have, how much of assets you have, how much of equity you have. They are gonna come and calculate. They are gonna come and calculate all of those things, right? And the other thing is that you may not have $50 million. Talking about that billionaire, that person may not have $50 million in the bank account. How is that person gonna pay $50 million in tax? Because that $1 billion is not liquid equity, right? Liquidated equity. That is only there in paper. That is only there in on the screen. When you look at the stock price of the stocks in the screen, you will see that, oh, that person has $1 billion. That person doesn't have that $1 billion cash on his pocket, on his or her pocket. So just think for a moment. What would you do in that situation? Putting aside billionaire, if they say we are gonna tax every people 5% on their net worth, whatever their value of wealth is, we are gonna tax 5%. One is that. The other thing is that, why 5%? Is it a magical number? 5% is a magical number. We can tax 20%. We can tax 1%. We can tax 0.5%. We can tax 200%. Why 5%? Why did they come up with this 5%? I don't know how they calculated this 5%. And the other thing is that they are saying that they are gonna use this money to fund Medicare or healthcare, right? Whatever there. Is one-time tax enough? 5%. So are they gonna do that every year? Because the funding for healthcare requires money, right? They need money every year or every few years. So once they are done with that, whatever amount they have collected through that 5% billionaire tax, once they are done, what are they gonna do? How are they gonna fund healthcare? They may say, we are gonna do it once again, and this time we are gonna do 10%. Instead of 5%, they are gonna say, we are gonna do 10%. And why not 20%? Right? And maybe, why only billionaires? Why not middle class people? Why not everybody? Let's tax everybody. Let's take 10%, 20%, 5%, whatever. They'll put that magical number there, and they'll say, oh, let's do this, let's do that. Think about it. I'm not talking about income tax. I'm talking about the wealth tax. Wealth tax and income tax are two different things, right? And how are you going to calculate your value of wealth? Because the price of the assets or equity or anything that you hold it's going up and down all the time, right? It goes up when the market is doing well, and when the market is in a bearish mode, the price of the assets goes down. And it also depends, right? Sometimes maybe the price of precious metals may go up and the price of the real estate may go down, right? In different situations. So just think for a moment.